Hello, I'm David Chow for the Finance News Network, and joining me from residential property developer VLW is its Managing Director and CEO, Craig Treasure. Craig, thanks for joining us.
Thanks, David. It's good to be here.
Well, first question, Craig. You recently raised $80 million via a share placement and bond issue. So why now, and what's the purpose of this raising?
For VLW, this raising is all about a continuation of our strong growth story. So we've been able to raise both the equity and the bond issue at the same time, and the two complement each other really nicely. From a timing perspective, that's all about taking advantage of value accretive opportunities that are in the marketplace, and we aim to continue our double-digit growth profile over the coming years.
So Craig, more about the bond issue. Where will the bonds rank in the capital structure?
Yes, David, the bond issue is a $50 million issue under the simple corporate bond structure, and they are unsubordinated and unsecured debt.
Will they be listed, and what's the coupon and term?
David, the bonds will be listed on the ASX. They will be paying an interest rate of 4.75% above the 3-month bank bill rate, which will give investors a likely yield just over 6.5%. Interest will be paid on the bonds quarterly in arrears, and they will be for a 5-year term.
And Craig, who participated?
As announced, our Bookbill process concluded early due to strong demand from our institutional investors and our retail broker syndicate, being ANZ, Evans and Partners and Morgans.
And now onto the share issue. How much did you raise and at what price?
We raised $20 million in a placement with our institutional investors, and we also intend to raise a further $10 million through a share purchase plan with our existing shareholders, and that offer opens tomorrow.
And the placement closed oversubscribed, so who participated?
Yes, David, it closed 2.3 times oversubscribed and was well supported by our existing institutional shareholders, along with some new institutions that joined our register and clients from Morgans.
Thanks, Craig. Now onto financials. How will this raising affect your gearing levels and debt profile?
David, our gearing range is between 15% and 30%, and after the completion of these transactions, it will maintain within that range. What this has done for us is it's brought diversity to our debt portfolio, and it is now made up of the bond issue plus our club facility with Westpac and ANZ, and our dates of maturity for our debt now range from 2019 out to 2022.
Now that you've got additional funding, what's your forecast for earnings per share growth and return on equity?
David, yes, we're forecasting double-digit EPS growth from 2017 to 2019. We think 2018, the growth will be reasonably flat given the additional shares on offer and the time that it takes to deploy the capital that we've raised. So the big step up in our business will come in 2019.
Last question, Craig. How quickly will the funding be deployed?
David, with this transaction, we've announced acquisition of a site in Brisbane of a little over $10 million for a housing project, but we've also increased our range of expenditure for the full year from $60 to $80 million range that we had announced to between $100 and $120 million range. So the deployment of those funds will really give us that big step change in the business that we're looking for in 2019.
Craig Treasure, thanks for your update.
Thanks very much for having us back.